In today's video, we're going to talk about the RRSP Homebuyers Plan, which allows you as a first-time homebuyer to get up to $35,000 tax-free that you can use towards your down payment. So let's get into it. So if you haven't watched the video that I've made on the RRSP, a quick summary of what RRSP does is when you contribute money into an RRSP, you get a deduction on your income tax. So the example I used was if you make $50,000 a year, you contribute $10,000 towards your RRSP, your income tax for that year will be the same as a person who's made $50,000 less that $10,000 contribution, so $40,000. So you save the income tax you would have paid on that last $10,000. With the RRSP Homebuyers Plan, it allows you to actually take up to $35,000 per person. So if you're a couple buying a home together, you can have up to $70,000 combined that you can withdraw from your RRSP without paying any income tax and use it towards the purchase of your first home. The only catch is that that $35,000 each must be repaid back into the RRSP over the course of 15 years. So that ends up being about $2,333 per year, or just shy of $200 a month. So how do you actually qualify to be a first-time buyer? If it's the first time you've ever bought a home, you definitely qualify. If you have not owned a home that you've lived in for the last 4 years, you can also qualify. So for example, if you've owned a home and then you had to relocate, for example, for work, and you're renting a place where you're living now, if a period of 4 years passes since you've last lived in a home that you owned, you can then now qualify for the RRSP Homebuyers Plan. So in my case, me and my brother bought a condo in Mississauga and we both lived in it. That was my first home, so to speak. And then since then, for the last 3 years, I've been renting a place in St. Catharines, which is where I'm currently living. I actually don't qualify for the RRSP Homebuyers Plan. However, my wife, who's been living with me for the last 2 years, actually does not own any real estate in her name, has not lived in a home that she's owned. So as a result, she actually qualifies for the Homebuyers Plan. So the rules around this is that you cannot have owned a home that you lived in for the last 4 years, and you cannot have lived in a home that was owned by your spouse, either common law or married. Because we've been renting for the last 3 years, while we've lived together, she has not lived in any home that I've owned. So how do you take advantage of this? In my case, because it's her that qualifies for the Homebuyers Plan, the funds in the RRSP should be in her name. However, my income is taxed at a significantly higher rate than hers, so I want to definitely get the tax deduction against my income. However, the money has to go into her RRSP. So there's something called a spousal RRSP, which allows you to take advantage of this. What we've done is we've opened a spousal RRSP account through Questrade, a stock brokerage company. And the spousal RRSP is pretty much exactly what it describes. So as the spouse, I am able to contribute money into that RRSP and get a deduction against my income. However, the account is owned by her and the funds in the account becomes her RRSP, and then if she chooses to withdraw it under the Homebuyers Plan, it comes from her name, her account. We have some savings that came from a sale of a rental property, so we're going to be taxed on the sale, the capital gains tax, so that amount is going to be added to our income this year. By contributing that amount through a spousal RRSP, we're able to get the tax deduction to offset basically all of the taxes we will pay on the sale of that rental property. And because we're going to be buying a personal home, we're able to then withdraw that and use that as part of the down payment on the new home we're going to buy next year. So some caveats to this is you need to make sure that the funds are in the account for at least 90 days prior to withdrawal. So you definitely don't want to do this as a last minute job. You want to prepare ahead of time. So we're now setting up the accounts. We're probably not going to buy a home for the next 4, 5, maybe even 6 months. So we're definitely getting prepared ahead of time before going out and making the purchase. The other thing to note is this is different from the first-time buyer mortgage options. So because this is the RRSP, this is more in relation to the tax or sort of CRA. With the RRSP Homebuyers Plan, you can use it towards a home that you're putting 5 or 10% down, but you can also use it towards a home that you're putting 20% down without getting that mortgage insurance. And it doesn't necessarily have to be on a single family property. The options on the CRA website allows you to even buy duplexes where you can live in one unit, rent out the other unit. It's very flexible as long as you are going to live in that property. Pretty much from what I saw, you can buy many different types of housing. It doesn't have to just be a single family home. One last thing to note, if you don't repay the portion that you have to each year, that amount is then added to your tax for that year. So for example, whatever amount you make, you will add $2,333 to that amount, and then you will pay your income tax on that additional amount. So if it's 20%, you may be paying close to $500 extra. And if you're at a higher tax bracket, you may be paying more. So essentially, you either want to pay it and avoid that tax, or just budget that, you know what, you're not going to reimburse the RRSP account, but you're going to have to eat that extra tax bill every single year for the next 15 years. The reason that we chose Questrade to open this spousal RRSP is that we're planning on reimbursing each year the 1/15th amount to that RRSP. And our plan is each time we reimburse it, we want that to be invested into index funds. So it's going to be part of our overall index fund investing strategy. And those funds can be invested through Questrade directly into the Vanguard Growth Asset Allocation Index Fund, VGRO for short, that we've chosen to invest in. So that's kind of our plan with these RRSP funds. So I hope you found this helpful. It can be a little bit complicated, so make sure that you do your research, you read through the Canada website by the CRA. I'll put a link below that goes into all the definitions and the terms relating to the home buyer's plan. And if you have any questions, feel free to comment below and I'll be happy to answer. All the best.